Morning, ladies and gentlemen. This is Greg Mikulowski from FXDD, and this is a Tuesday, March 9, 2010, New York opening Forex report. Let me remind everybody that trading for foreign exchange uh, uh, is risky and should only be done with risk capital, not with change your lifestyle. Traders could lose all their risk capital trading Forex. FXDD does not guarantee any recommendations made within its commentary. Traders should make market assessment and take trading positions based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be to only use leverage which is congruent with personal risk tolerance. Although the care was taken in creating this report, FXD does not guarantee the accuracy of the information. Today we did see some news coming out of China. They said they would support U.S. debt. They'd also support or be a little bit wary about gold. As a result, we're starting off with the gold chart here, and as you can see, yesterday we came down, tested the 200-hour moving average, and then today the market used that 200-hour moving average line as a level of resistance here, and the market started to move back to the downside here. We do have support at the $1,116.15, currently trading just above that level at 85. So we'll see whether the market can continue its pressure to the downside on that China news. Also out of London, we did have some news that came out of the UK today, and we'll start off by taking a look at the sterling versus US dollar chart, and that news was bearish for the pound sterling. They did have their trade deficit come out, and this was the weakest in 17 months, and it was exports fell sharply, and this caused the trade deficit to swell. This is not good for the British pound, and the market started its move to the downside. Also, we had a report out of Fitch. Fitch is one of the rating agencies, and said the Britain's sovereign credit profile had deteriorated, and urgency for fiscal adjustments was greatest for countries like the UK, Spain, and France, among other AAA sovereigns, AAA sovereigns. But it also said Britain was still within tolerance of the top-notch rating. So it was kind of a semi warning that their rating could be hit if they don't start to have some fiscal austerity and initiate some of those things in their budgetary process, and this will cause all sorts of hardship for the pound sterling. So we are seeing the market dislike that idea. Yesterday, we're looking at this level up here at the 100-hour moving average, saying how the market was very quiet, but we're remaining below that 100-hour moving average line, and that's in fact what we did in the first hour of trading. We came up and tested that line at the 150.71 level. The market reached a high of 150.69, and it's been down ever since. Currently, we are testing the 61.8% retracement of the move up from I'm going to have to go back in here, from this March low. The March low came in at 147.82, and we moved, that goes up to the high that occurred up at this area right here at 151.94. We had the triple top just yesterday, and the market has corrected 61.8% of that move already at 149.39, and the market is finding a little bit of support trading at 149.65 as New York enters the market. And we see some profit taking. We do know that we do have resistance up here at the 149.88 level. Why is that important? Well, we have this low here. We also initially, when the market came down, it came down to 149.88. So needless to say, that's going to be a nice level of resistance up here at the top side. It's also the 50% retracement of that move. So we have 1, 2, 3 reasons why 149.88 should be a topside resistance level for the currency pair, currently trading at 149.65. So in between our two, our support at 39, our resistance at 88, and we'll see how that reacts here in the New York session here today. Taking a look at the 5-minute chart, just for learning purposes, educational purposes, the market has been trending below this 100 and 200 bar moving average. Look how where it all started. It all started up here, where the 100 and the 200 bar moving average converge with the price. That is what we call Three's Company in the FXDD world, and Three's Company means that the two moving averages, 100 and 200 bar moving average, are converging with the price, and often it leads to a trend type move. What did we see? We saw a trend type move. We saw the market start to move rather dramatically to the downside, and it's been trending ever since, staying below this 100 bar moving average. Tested it right here. Nice selling opportunity right here, and the market went down, tested our support level at 149.76, which, if you go back in time, this was an old level that if I go back in time to early March, 149.76. In fact, March 3rd, the market had a 1-2 double bottom, and that caused this, that started this whole move to the upside for the sterling versus U.S. dollar. The market remembers those levels, and it remembered it today, and we've had the double bottom here, and then we moved up through the 100, but could not sustain that move, and then started to move back to the downside when it broke through 149.76. We saw further pressure. So look for resistance here at 76. Look for resistance here off at that 90. where was it, off the this level right here, 149.88. So good resistance at 76 and 88, and also the 100 bar moving average currently comes at 86. So another reason why the 88, 86, 87 level should be a key level of resistance. Let's go to the euro versus US dollar, and this currency pair started the day below the 100-hour moving average, moved down a little bit, came up, tested the 100-hour moving average. Note that the traders who are aggressive traders will sit there and sell against the 100-hour moving average. Why? Because their risk is just above the 100-hour moving average. So they'll sit there and sell here, not knowing what the heck the market's going to do, except they know their stop is here. So they're risking a little to make a potential lot. And then the market goes down, tests the 200-hour moving average. So we're in between our goalposts. Our goalposts are defined by the 100-hour and the 200-hour moving average. The market bounces up and then falls back through the 200-hour moving average, and that's when we start to the downside. This level is 135.98. It's important because we're going to go to the 5-minute chart. I'm going to show you the effects of that key level, and you can see here that it also at 135.98 the market did find support. It bounced up, came up, tested the 100 bar moving average first, and then moved down, and then came up and tested the 200 bar moving average and failed at that level, and that's when this market started to move to the downside. Note also that this 98 level was then used as resistance. So is that level important? Yes, it is important, and it also is a 61.8% retracement of this last move to the upside. So again, another reason why levels become important is because they are they have technical levels that the market follows, and that's what we're looking for here in the euro versus US dollar. So look for resistance at 135. At this 135.98 level here in the euro versus US dollar on any sort of move to the upside. We might find some resistance up here at 135.86 here today as well. Let's take a look at dollar yen. Why is dollar yen important? We're looking at the 100-day moving average. That 100-day moving average was at 94, 14 here coming into today. We were also looking at the retracement level at 90.13. This 90.13 is of this move down from the February 19th high to the March 4th low. The 50% retracement of that came in at 90.13. So we had the 90.14 and 90.13 level as key support levels for the dollar yen is coming into the day. And the market went through that level. Let's go to the 5-minute chart because we can see this closer. The market initially went through to that level, bounced off of that level, then came down through, and then it started to use it as resistance on this little break to the upside here, where the market temporarily moved above the 100 bar moving average in the 5-minute chart, and then it's moved to the downside. So now as the dollar yen, as we enter the day in the dollar yen, we have resistance at 89.89. That level is the 100 bar moving average in the 5-minute chart. We also have resistance at 89.97, and well, let's look at the 90.04 level. That's 200 bar moving average. We've been below the 200 bar moving average since this time. And notice this is the threes company trade again. We have the two moving averages and the price converging at the same time. That's right here. It's right here. That's right here. And then we move to the trend move to the downside. Those things kind of line up. Give you nice clues as far as when the trends might start to occur, and they occurred nicely last night. Let's go into the dollar versus Canada. This is an interesting chart because if the gold prices are coming down and maybe commodity prices will come down, and maybe we see the dollar Canada start to rebound, and the dollar gets stronger, getting it weaker, and we have moved back above the 100-hour moving average. How long has it been below the 100-hour moving average for this currency pair? We can go all the way back here to this point where the market moved above. That was on March 1st, and since that time the market's been below. So this is somewhat significant. We'll be watching this 102.96 level. That's a 100-hour moving average. As long as the price can remain above that, or have at some point move above that, and we should see some momentum in the currency pair to the upside for the dollar versus Canada. Now we are running into some resistance at the 103.07 level. The market remembers these levels, and even though we get some bullish news, it's still going to remember those levels, and it's still going to find reasons why that should be resistance. And if you can look back to this time right here, the market initially bottomed at this level, and we had a lot of trading up and down above and below. We used that level as resistance right here. So we are running into it here. We're going to have to get above that level in order to move to the upside for this currency pair. We do have a lot of other resistance levels that we do have to look at in regard to this. 103.39 is one of them, and then go up to this top right here, 103.67 and 104.05.15. But it looks like this formation here, this floor here at 102.59 is causing the market to move higher. That's our report. Thank you very much. Bye bye now.